Our next speaker is Scott Williamson, Managing Director at Blackstone Minerals.
Thank you, and thanks for the intro. Great to be back at the Nickel Conference. Thanks to Peter for the opportunity. I think this is our fourth Nickel Conference as Blackstone. We initially started as cobalt explorers, and we picked up this great asset in northern Vietnam. It's the previously operating Ban Phuc nickel mine. And when we acquired this asset, nickel price was about $12,000 per tonne. And who would have thought today we sit at around that $20,000 per tonne mark, and the sentiment is probably poorer than it was when we first picked up this asset. So it's quite amazing how it's all played out over the last 2 years. But what I would say is the old Warren Buffett quote, be greedy when the others are fearful, because it's a great time to be getting into nickel, because the medium to long-term outlook is very strong, and we're seeing that from the demand that we're seeing from the lithium-ion battery industry. So what we're looking to do is restart this Ban Phuc nickel mine. We're going to also build a downstream refinery which will produce the chemical products required for the lithium-ion battery. So it's an vertically integrated mining and refining business. And we're actually looking to import half of our feedstock from Australia or Canada. And we've taken some interest in other nickel developers. So we have an interest in Nico, which is listed on the ASX, which has the world-class Wingelina nickel laterite project. We also have an interest in Corazon, who operates in Manitoba, the Lynn Lake project, significant nickel sulfide ore body in Manitoba. We also have another interest in Manitoba, Flying Nickel, which is listed on the Toronto Stock Exchange. And they also have a large nickel sulfide system as well in Manitoba. So the idea is that half of our feedstock will potentially come from one of those partners, or through partnerships with anyone else out there that's looking to produce nickel concentrate. So maybe even the team at Azure. And congratulations to the team at Azure. Very successful story, and we also share a common shareholder out of Germany. So hopefully I can make him as rich as you guys have. But yeah, anyone who's out there who's looking to produce nickel concentrate, you can always talk to the guys at BHP or Traffy or Glencore, or you can come to friendly Blackstone and we'll look after you. So yeah, we're open to talking to anyone out there who can potentially help feed our refinery. The refinery will be built to a scale of 40,000 tonnes per annum nickel, and our mine will produce around 20,000 tonnes per annum of nickel. Just a quick corporate snapshot. Still well positioned with cash at the last quarter of around 13 million. So it was 10 million plus another 3 came in straight after the end of the quarter. From an R&D rebate. Listed investments sitting around $10 million, so still well positioned to complete our definitive feasibility study, which is nearing completion. Very supportive shareholder base. As I said, Deutsche Balaton, they bought into Azure at the same time as Blackstone, and it's been a similar wild ride for them. But since then, we've also brought in some bigger names like Fidelity. We also have BlackRock on the register. Nanja Savetta, hedge fund, long only fund out of Asia. So we've got really good institutional support. Board and management with 5%. So you can see the board and management there. It's a blend of geology, mining engineering and corporate governance. The most recent addition, Dan Locker. So I'm not sure how many nickel conferences Dan has presented at, but it's great to see Dan's in the audience today. And he's been a great addition to our team to really push us into the production and operational phase. So you can see here, we're in the northern Vietnam region. It is the mine and the refinery will sit around 5 or 6 hours west of Hanoi. And you can see the Ta Quan nickel project, which is our upstream mine. We have around 500,000 tonnes of nickel. Most of it's in one large open pit, low strip ratio, 3:1. Fairly similar to a Mount Keith style, but we do also have byproduct credits in copper, cobalt and PGEs. We also have abundant hydropower, and so we're already hooked into the renewable power grid. The refinery is where it gets exciting. We're going to take the concentrate, we're going to produce a PCAM, which is the precursor to the cathode active material, and that will have nickel, cobalt and manganese in the ratio of 8:1, or maybe even a higher nickel ratio. So there is a trend to even higher nickel ratios. They're looking at up to 9.5.5, and they're even looking at removing cobalt completely. So this is a sort of snapshot of the business model. So we have those interests in Manitoba and Western Australia. We also will look to third-party concentrate feed providers. We have a public relationship with Trafigura, which has been announced. We're talking to all of the different traders. The idea is that, 50% of our feed would come from third-party feed. And that's where we're looking to also potentially bring in a partner into the downstream refinery. So the downstream partners will most likely come from either lithium-ion battery or car manufacturers. We are looking to sell down up to 50% of the project, and they will bring also some of that experience and capability to convert into that precursor chemical product, the NCM 811. As always, it's becoming such an important thing, particularly around the dirty, let's say, dirty nickel out of Indonesia. And I do say that lightly because not all nickel in Indonesia is dirty, but let's put them in the dirty camp for now. I think most of us that are operating in Australia, I'd say we can put ourselves in this green nickel camp, and that's really about using our best interest to get as low a carbon nickel as possible, focusing on sulfide nickel, which is a lot easier to process with much lower energy intensity. So really, we've got that abundant renewable power. We've got a hydromet flow sheet, which really driving those low CO2 footprint. This is a cost curve that we're looking to sit in the first quartile of the nickel sulfate cost curve. So this has come from data from Trafigura. So you can see there the benefit of operating in Vietnam is we have that low power costs, also some very low and competitive labour costs as well. So and that's really the benefit of having nickel sulfide as well. So if you're starting with nickel sulfide, you've got the best chance of sitting in that lowest quartile cash cost position. And most importantly, you will have the best opportunity to get towards net zero. So we've done some work with a group called Minviro. We see them as the world leaders in life cycle analysis of CO2. We've got a pathway to net zero for our final product, which is that NCM PCAM product. You can see there we're significantly lower than our peers in Indonesia. The HPAL and the RKEF or nickel pig iron to matte process can be 2 to 6 times the CO2 footprint. And these products coming out of Indonesia are just not going to make their way into a premium electric vehicle out of Europe, the likes of BMW, Mercedes. They're going to make sure that they're tracking their nickel and they're tracking their CO2 footprint, and we're already seeing that in our discussions with downstream partners. This is a snapshot of our belt. So we've got what we see as a potentially globally significant nickel sulfide district. We've drilled out the first few ore bodies. We've got 500,000 tonnes. And most of that's in one large open pit. We have a number of small, high-grade, massive sulfide veins, which are underground opportunities. We think there's plenty more to be discovered. We're focused more on the development phase at the moment, but we will get back into exploration as we move through this development phase. So that's the large Banfuk disseminated ore body. So it all comes into one big pit. It'll produce around 18,000 tonnes per annum of nickel for 10 years, low strip ratio, 3:1. So it's a large-scale bulk open pit mine, and then we've got a couple of small undergrounds that also top up the high-grade feed. This is a flow sheet, so the very conventional at the upstream level, so it's a conventional crush, grind, flotation, concentrate. And then once we take the concentrate down to the refinery, the refinery and the mine will be separated by about 50 kilometres. We've found a nice spot for the refinery. And that's where we're using a pressure oxidation process combined with solvent extraction, two tried and tested technologies used in the industry since the 1960s. So there's nothing novel about this process. This is all off-the-shelf equipment. It is probably the first time as an industry that we've had to produce chemical products from nickel. So we have sort of used existing technology. We've brought it together to make a nice clean flow sheet. We've had a blank canvas to basically look at how's the best way to get nickel concentrate into a chemical product for a lithium-ion battery, and we've been working on this for 4 years. So this is well developed. We've spent 12 months piloting. We've sunk tens of millions of dollars into this process, and we're very confident this is the future of the industry, very similar to what IGO is doing. And I'd say we might even be a little bit ahead of IGO. I think the key thing here is we can drop out nickel sulfate, cobalt sulfate, if required, or we can keep them in solution, bring in some manganese sulfate and produce the NCM product, which trades at a significant premium to the underlying metal price. The other benefit of this flow sheet is that we have feedstock flexibility. So we can take nickel concentrate, we can take high arsenic, high MgO concentrate, we can take MHP, nickel matte, and the black mass, which is the product from the recycled lithium-ion battery. So very flexible flow sheet, and that's really the benefit of having the pressure oxidation, but also having a split flow sheet where we actually produce MHP as the intermediate product, which also allows us to feed in MHP. So any nickel laterite miners out there would also be open to taking your MHP. So it's been a big 4 years. We picked up the asset. We've drilled over 100,000 metres, diamond drilling. We've gone from scoping through the PFS, and we're at the final stages of the definitive feasibility study. So now it's all about locking in a big partner. Those partners most likely will come from South Korea, Japan or China, some of the biggest players in the industry that we've been talking to for many months now. So they're waiting for that final DFS, which is very close, and then we can look at a joint venture partnership. They'll bring in a significant amount of capital, they'll de-risk the project, and then we will get the re-rate. So now's the time. Actually, I just want to quickly touch on the rare earths because it's getting a lot of interest, and it's probably the reason why our share price isn't going down at the moment. It's unfortunate that, the sentiment in nickel is so poor, but we bought this opportunity from a local rare earth refinery, and they have the ability they've come to us for our mining expertise, and together we're looking at a joint venture where we'd look to mine the rare earth deposits in the north of Vietnam, which are very close to where we're operating for our nickel. So they came to us for our ability to help them on the mining. They bring the refinery. So there's an operating rare earth refinery that has been operating for over 10 years. We also have an ASX-listed company, ASM, in partnership as well. So between the three of us, we have the ability to go from mine all the way through to the metallisation of rare earths. And it's a great, exciting opportunity. It is a side project. I'd say it's a side hustle in some ways, but it is getting a lot of interest. And the reason is because some of the best rare earth deposits in the world are located in the Dongpao region, which we're looking to access. So very high grade hard rock deposits that have been known about for a long time. The Vietnam government is only just now opening these deposits up, and because we've been operating in Vietnam for 4 years is the only reason we'll be able to access them. So in summary, vertically integrated mining and refining, producing that downstream NCM 811 product, using the abundant hydroelectric power, globally significant and relevant nickel sulfide district, first quartile cost position with some of the lowest CO2 footprint in the industry. That has been verified by the Nickel Institute. It's a partnership-based model. We need a significant amount of capital. We're not going to do that ourselves. We're going to bring in a big partner. And maybe I should take that last one down because we are still delivering into a rising macroeconomic environment. Who would have thought with this current sentiment? But it's still there. Thank you.